SPDas, the trading floor is yours.
Yeah, thanks, Igor. And good morning and good evening, and welcome back to the Tokyo Sydney overlap. Let's get started off with the daily chart of Euro USD. As always, I've done the labeling here already. Uh, Save some time. So Euro has completed not only completed five waves impulse, indicating the larger degree trend to be higher, but the corrective ABC is also complete, and what we are seeing right now is lower degree waves, ones and twos being carved out. It's 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 just a matter of time before we see prices break out higher above 1.0550 and push through the 750 mark, or actually it's poised, it's well poised to push through 1.12 up there. All right. So if we go back on an hourly chart where the action is lying right now, counts are already there. We we were expecting a bounce, and that's what we've got. But tell you what, there are some questions still uh, on the sustainability of this rally, because the RSI is actually diverging. So we've got to expect some kind of a decline or some kind of a corrective decline in the near term before the rally could actually continue. So as far as the waves are concerned on the hourly chart, we've got five waves up. That's the of minute degree, and then corrective ABC, and again we've got minute 1 and 2. So it's a series of waves, ones and twos, and again 1 and 2. So at least two degrees, actually not 2 but 3 degrees of wave structure. Now I'd like to bring up one more thing which we haven't really discussed as a possibility, but we've discussed as an alternate. Although uh, if it wants to, the entire structure could be seen as a corrective 333 as well. So it is quite possible that it goes a bit sideways for the rest of February. And before terminating, it could be a running flat. I mean, if it terminates here, it could be a running, sorry, running flat wave two, and two more waves. It could be a triangle wave two. So just keep in mind that euro and other crosses might go a bit sideways as well. Possibilities are there. And one of the strongest reasons that I feel it is still possible, that's why we keep booking partial profits all the time. Take money out of the desk and prepare yourselves to go long once again with the corrective. So the limit orders are already in place in the system. What I would suggest is book. If you're booking partial profits, that's a good sign. And once again, you can have a limit order somewhere around the same price, around the New York session, somewhere around the 370 or even lower, 350, 360. All right. If you look at the 4-hour chart, then the RSI should be, I mean, the more clear there. You see that price action is inching higher, but the RSI is not. That's the reason. I'm not saying it's a downtrend that's going to resume. No, that's not the case. The only case is it is going to give us yet another opportunity lower. So I'm going to change the path a bit here as far as the waves are concerned. Maybe we drop up more, we drop towards the 61.8% of the entire rally and then move forward. But that could be the next trajectory or path. And Okay, trading point of view, this could be the next entry somewhere around 350, 360. The stop loss is around 1.0200 and the take profits are around 750, no change there at all. So that is about Euro USD. Let's pick up the dollar index. All right. Look at the daily chart of the dollar index. The larger trend is already down. This is it's quite a bit confirmed. It's just about 3 years back. Uh, we also see the correct wave complete at 0.618. That is the A, B, and C correct wave, correct value. Furthermore, we also have lower degree waves, ones and twos in place now. Now, this consolidation which is going on if you look at the hourly chart, you might want to see it more clearly. That consolidation, even though prices are almost willing to break lower out of the range here, 106.80 or so, the RSI is not supporting right now. I'm seeing a diverging scenario here. So it is time if we've taken short positions, we've already took short positions here in the New York session. It's time to take some partial profits at least because there's a bullish divergence scenario on the RSI, and we got to respect that. The only thing which is now possible, ideally, is a pullback. First, a pullback, and then continuation lower. All right, so this is what is looking more probable in the next few hours or next couple of sessions or so. As far as the direction of the trades are concerned, we've got a series of waves, ones and twos in picture. Unless, as I discussed for the euro, if it is unfolding as a triangle, then that's the first wave of the triangle. The second wave of the triangle, we've got to see some third wave rallying straight up to 109 mark. It can dig sideways for a while. All right, that's only if it is unfolding as a triangle. Now, corrective patterns and corrective waves are really complex to identify which is unfolding unless they present themselves. So for the triangle, sorry, for the triangle to present itself, we need at least three waves. And right now we got wave one, only wave A and B. So there could be wave C, maybe a running flat complete, or it could be a WXY complete. It could be anything as the corrective waves are concerned. There are so many combinations. Only one thing or only one direction, which is quite on the high probable side, is that the bears are probably back in control because we've got the first impulse in place. All right, that is the only strong factor for us to keep selling at high levels. So the next entry for the dollar index, you might want to mark it somewhere around 108 or just below that. Even if it rallies to 108, 50, 60 levels, I would say it would be a great opportunity to enter on the short side. With regards to the stop loss, 109.85 is technically correct. Nothing below that, though. And ideally, it could be around 110.30. All right. So that is the story in the dollar index. No change in the direction. The only thing we are right now concerned about is prices may dig a bit sideways before breaking lower. All right, so let's be prepared for that. The only strategy for that is keep booking partial profits, allow yourselves a bit of a break, a bit of pullback, and then re-enter on the direction of the larger degree trend, which is down. Selling on rallies is on cards for the dollar index. All right, another interesting chart is for gold, and I would just like to bring up the 4 hour story first, and then we'll come back to the hour chart. The story in the story on the 4 hour chart is neatly poised as an expanded flat top. This is the structure which we have been calling for since quite a few weeks now. We are not saying it's the only option, but we are saying it is a high probable option. Just complete wave 4 minor degree and then resume its rally towards the 30, 31, 32,000, 3,200 mark. Okay, having said that, we are right at wave B for minute degree, and going a bit forward, going a bit further, sorry. Look at the hourly chart. Let's zoom in a bit. Okay, so the hourly chart is, if you do, there are 2 degrees of, there's one degree of an impulse, and so let's do the impulse first. And then we've got 3, 4, 5 lower. And within that wave 1 impulse, if you look at the subdivisions, there is a clear 5 wave decline. Once again, you can just take that impulse and begin printing. All right, so you've got a sub-minute 5 waves. All right, 1, 2, 3, 4, a triangle, and 5. Now, this gives us a lot of confidence to believe that the next move has to be at least 5 waves lower of one larger degree. So it's either wave 1, 2, 3, 4, 5. In that case, it's going to be 5, 5, 3, 5, 3, 5. If not, at least an ABC is definitely on the cards. So if I go by the Elliot extension, excuse me, the Elliot extension for the third wave is up on your screens here. And that is pointing nowhere before 2800. So the next target or next stop for gold could be well around the 2800 mark, and that also aligns pretty well with just shy of that support being taken out at 2775. But there is a good support coming at 28 as well, which could be the next target for bears. All right, so keep an eye on the Elliott wave 3, and tell you what, it's not going to stop at 2887. Normally the third wave would extend, and if it does, it's better to just place a double click here. uh, would not be surprised to see if prices drop all the way towards the 2700 mark as well. All right, 27, not exactly 2700, but the wave 4, which I have been marking up. This is the price which should be taken out with the first impulse. So if it goes like this, one, two, and then three, a bit of wave four, and then five, that that would be the first wave of a minute degree. All right. Let me just remove this and clear the chart. Bottom line for gold bears to remain in control is prices should ideally stay, or now it should stay below that 29.42 high. And chances are that it could stay because we've got a neat little impulse here. At least a three-wave corrective decline is on the cards. All right, so that is gold, pound. Next is pound. Same story continues for pound as well. I'm going to straight away take on an hourly chart. As we discussed in the Euro USD. Now, believe it or not, if okay, let's do the wave count first. So we've got wave one, two, three, four, and five carving the first impulse. All right, that's a good one. It's been meticulously followed by a zigzag 5-3-5 structure. So we are good to place an ABC here. And thereafter, what we see is a kind of an impulse, again a corrective decline, and that could be the first wave of the third wave as well. So multiple degrees of wave threes are unfolding in pound as we discussed in the euro as well. The only concern that we want to show here is, of course, there is no directional concern at all. It goes without any saying or doubt that high probable directional uh, trade setup is on the north side without any saying. The only concern is if the prices rallying and the RSI stalling behind. Now, this is what is a bit of a short term concern, and we need to just pay attention over there. There's nothing to worry. The only thing is, why just remove this count and redo it with one, two, uh, three, four, five. We're going to push higher. Three, four, five, and let's change the, the degree to minute. There you are. So the only concern that we are presenting here is be prepared, or let's be prepared for a corrective decline. And there's nothing wrong in it. It's a very healthy sign before the next wave higher resumes. All right. There you are. 50% or a 60% decline back towards 24.30, or that would be really healthy if it drops to 24.30. We've got limit orders in place in the system as well, and I would humbly request you to look into these areas where you could re-enter on the long side, please. All right, the upside targets are well poised towards the 2800 levels. They were 27 and 1.3, 3100, 1.3200. All right, so the direction remains absolutely unchanged. We just got to be a bit patient. I think there's one more decline left. That's what the charts are indicating. And if we get that, it's going to be yet another opportunity to get on the long side. So be watchful, please, around 2450, 2430. That would be a good level to re-enter on the long side. If you're booking profits, please do it partially so that just in case we are not completely out of the trade. All right. There is a resistance being taken out here. You watch out. That past resistance is just being taken out. It calls for a pullback. I mean, I would not be surprised if the pullback is somewhere in the vicinity of the 61.8% as well, which is 2430. It's an opportunity for us, so please be watchful. The next one, which we have trading interest now, is the Bitcoin, and I would bring up the 15 minutes time frame. We've got some action going there. Now, if you look at the structure, that labeling was perfect. What we did in the New York past session, wave one and wave two. Also, we are now getting an impulse higher. There should be some divergence here. The divergence is still not there, so I think it's picking up on the north side already. We've entered longs somewhere around the 93, 700, 800 mark, if I'm correct, 95 something, 95, 800, and we are poised. Bitcoin is now looking poised towards the 100K and 104K. 100 and 104K. I would like to just change it a bit. We've got to move this on the right hand side. And that is wave 3, 4, and 5. And there is no diverging scenario as well, so it's a good sign. We don't see a divergence there. That means the strength is real, and a push above that high, intermediate high. This one around 97, 98 would really trigger further buying in Bitcoin. We are going to remain a bit cautious, though. I can see that a corrective decline also remains possible, but that is just a temporary corrective decline back towards the 61.8% of the rally, back towards 95, 900 something, and then continue higher. So be wary of the alternate path as well. But at least for now, it looks good that Bitcoin bulls are back in control for a while, and they are looking poised to extend the recent rally towards the 100K mark. All right, so that's it for now in this session. Let's bring it a pause here, and we'll be back again in a few hours during the London times. Once again, thank you for your presence. Thank you for taking time out to watch the video. And until the next one, good luck to your trades. Back to you, Igor. Thank you so much.
And thank you, SPDas. It's always a pleasure.
Yeah.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com.